What's going on, everyone? Happy Money Monday, happy President's Day. Very excited to bring you the very first dozen update of Dawson's dozen and Diego's dozen. And we're going to talk a little bit about the market volatility. So Dawson.
Yes, sir. Before we get into our specific stocks and the dozens and tracking them, we just want to talk about the overall market. It's been a bloodbath lately. Going back to 2020, we went through this great bull run. After the pandemic, people were trading, they were buying stocks, they were getting into the first time ever. As it's kind of passed on, these stocks have went on runs, and then most of them, a lot of them have collapsed. And I'll take you through a couple of numbers. So the Nasdaq represents 3,000 stocks. Of that 3,000 stocks, 1,500 of them are down 30% or more from all-time highs. Of those 3,000 stocks, 1,000 of them are down over 50% from their all-time highs. So that tells you if you are selecting single stocks like we are attempting to do with the dozens,
Tempting.
1/3 of them are going to be down, especially the growth stocks and tech stocks. Half of them are going to be down like 30%. So it's really not easy to select single stocks. That's why it's important to diversify. The more stocks you own, the steadier this ride has been. For us younger folks, I mean, we kind of welcome volatility. We can keep buying. We got time on our hands. We can keep buying as they go lower and lower and lower. Eventually, though, we're in it for the growth. And just, I'll go straight up. I'm down 4% for the year. He's down 12% for the year.
12.5.
Not exactly how we want our Dawson's and Diego's dozens to start the year off, but like everyone I know is looking at their portfolio like, damn, when's this gonna end? When's this gonna end? And we've been talking about it for the past year. Interest rates are gonna rise. Interest rates are gonna rise. The Fed's meeting, they're probably gonna raise interest rates. Finally starting to see it happen, and because of that, money's becoming harder to borrow or more expensive to borrow, and therefore all these growth companies that depend on, borrowing money to fund their endeavors for hopefully for future profits, they're all taking a beating and their values as companies are shrinking. But this is the reality, is a lot of these companies are down big, more so than we've ever seen. It was almost euphoric during the pandemic, I would say. Everyone was doing good. Everyone, it doesn't matter. Everyone felt smart. Now people feel really freaking dumb. So anyway, you got anything to say on volatility there?
No, it's just, I think with uncertainty across the board, with inflation, central banks, geopolitics, I think it's going to keep being very volatile.
Yep.
However, we don't know. We can't predict the future.
So with all that being said, let's start going into the dozens. Couple winners, couple losers, just the highlights. We'll start with so far the losing dozen. What do we got?
For now.
For now.
So overall collective, my dirty dozen are down 12.5%. The worst three performers are Roblox, down roughly 50%. Video Game Maker not doing well. DraftKings is down roughly 20%, a little over 20%. Gambling company, but that's all right. Still a firm believer in them. And then last but not least, I got Tesla down right now. Best performer is right now for me ExxonMobil, with gas going up right now, almost 100 a barrel.
Yep.
Right now with gas prices going up, we hate to see it as consumers, but ExxonMobil loves to see it. Dawson mentioned to me that they're going to be doing a buyback share program as well as giving a little more dividends, taking care of their shareholders. That's great. And then the second one is T-Mobile. AT&T and Verizon were in like a big debacle with the aviation industry. Their 5G technology coming out messing with the instruments. T-Mobile came out and acquired Sprint. So T-Mobile has increased their users and has stayed out of the news. Love that. That's a little recap of the highlights on mine, good and bad. Dawson's dozen, doing better for now.
No, better is a strong word when we're down 3.5%. But I will say, tech companies and growth companies have been the downfall of both our portfolios. So for me, the worst performer has been by and large Square. Square's down like 50%. Square is a fintech company, and they're heavily investing into the future of small businesses, in the future of payment processing and things like that. I like them long term, but they just got overvalued and they're coming back down to earth. Second one is Amazon. As crazy as it is, as big as it is, as awesome as the company is, I mean, it takes care of you in 2 days, 1 day shipping. It's down 10% for the year, just in the past month and a half. The real winner here is Mackenzie Scott. She got out getting out the right time before Jeff Bezos and Amazon have kind of come down. Now, my two best performers have been gold, which is Barrick Gold. It's a company that mines for gold. And then my second one has been Health Equity, up 11% for the year. And Health Equity just does HSAs and health plans and more employee benefits for corporations, for employees. I think one thing we can see right now versus where the good performing stocks and the bad performing stocks, The good performing stocks are in commodities right now. It's going to be your metals. It's going to be gold. It's going to be gasoline and energy. It's going to be things that we're using as inflation increases, the prices of these materials increases. Now, what we've seen terrible is tech and growth companies, and they've just gotten ahead of themselves. The market, ripped in 2020, 2021. Great markets until about September 2021. Tech and growth companies kind of stalled and came down like we've talked about. So anyway, we'll see how the dozens roll for the rest of the year. Really, in the long scheme of things, the fact that we're investing long term. We're going to look back in 10 years, and I think that these portfolios will be up, and they'll be up, big. That's
Absolutely.
just
We'll give you that update.
the nature of investing. Yeah, and we'll see you guys in a decade for that update. All right. Anyway, happy Money Monday, guys.
Happy President's Day,
Happy
guys.
President's Day. We hope you enjoyed the day off of the market. And,
Crush the week.
Crush the week. Woo!